good evening, everybody.
Hey, good evening, Abhijit. How are you?
Hi, I'm good. I'm good. Thank you for joining on such a short notice.
No, pleasure. In fact, we were told about this yesterday itself, but we didn't fix up the time, and we're most happy to be speaking with you.
Sure. So, hello and welcome, everybody. Very good evening to all our viewers. So today we have a very interesting webinar from GoldenPi. I'm Abhijit Roy, and I'm going to be your host. I know all of us have joined on a very short notice, but to our viewers, I can promise every second is going to be very insightful today. So today we are going to understand and discuss about a very marquee public sector unit organization, National Highways Infrastructure Trust, the role it plays, and NHIT is raising funds for nation building. So we would want to understand the story and be a participant in this whole drive. So with that, let me introduce our very respected and elite panel that we have today over here. We have Mr. Suresh Goyal, who is the Managing Director and CEO of National Highways Infrastructure Trust, Mr. George Mathew, who is the CFO of National Highways Infrastructure Trust, and Mr. Pranav Inamdar, who is the Director of Trust Securities. So with that, I'll request Mr. Pranav to share a more detailed background about Mr. Suresh and Mr. George.
So I'm delighted to be in this such a august company of Mr. Suresh Goyal and Mr. Mathew. Mr. Suresh Goyal is the MD and CEO of NHIT, which is a National Highway Infrastructure Trust. And he has a vast experience. One of them being he was with the Macquarie in Singapore. So with him, he brings a very professional touch to the InvIT and to this organization. And I'm sure that with this experience, we'll be able to see far more better and transparent way of things, and a lot of more such good issuances to come. Mr. Mathew has been also has a vast experience of 25 plus years, and he was with L&T in that. So with such a professional panel, it is a moment of pride, and I'm at a loss of words to even talk about more about them or anything. So with this, I think we should begin. But let me first introduce you the panel to Mr. Abhijit Roy. Mr. Abhijit Roy is first generation entrepreneur with a online debt platform, by far one of the first and one of the right now acknowledged by SEBI as one of the biggest debt platforms. And at Trust, we are very, very proud to be associated with Mr. Abhijit Roy and with GoldenPi. And we have been working together from last 1.5 years, and we look to explore far more higher reaches of the market.
Thanks, Mr. Pranav.
We can start, Abhijit. Yeah,
sure.
Thank you.
Thanks, Mr. Pranav.
Before you start, Abhijit, where does GoldenPi come from?
The name?
The name. Sorry.
Yeah, so there is a bit of philosophy behind that. We fought with a lot of different combinations. But golden, we thought that, it's very auspicious, precious metal for us Indians, and it means safety and security. And pi, the Roman letter pi, the Greek letter pi actually, capital Pi stands for multiplication. So we combined both of them, and we thought, grow your wealth safely and securely in a very harmonious way. So that's how the name, came up.
All right, interesting. I thought as much, that pi itself being 22 by 7 being infinite number, right?
True.
You don't know how many trillion digits.
True.
Golden being okay, very thoughtful. Yeah. Lovely.
Yeah. So so let's begin the discussion today. And I would like to begin with you, Mr. Suresh, by asking the first question. So you have had a very illustrious career in the infrastructure sector and on the corporate world. So, and I know that, you did your MBA from IIM Lucknow, then you joined the corporate sector. You had a very trailblazing career over there with a stint in Singapore. And then you did a complete transformation to helm one of the marquee public sector units in India, which is National Highways Infrastructure Trust. And we know that, the life in a corporate job and life in a job handling a key, head position in an organization are poles apart, right? I mean, to take up that kind of a job, one really needs to look beyond balance sheet and numbers to actually growing the nation and doing good for the society and the country. So wanted to understand what motivated you to do this transition from a corporate life to, a public sector unit heading one of the marquee institutions.
Well, I think there's a word in English called serendipity, which basically means, lucky coincidences, right? Happy coincidences. So I think my career, my life has been, inspired by that word. I have been fortunate to have been associated with infrastructure with very, very strong brand name like Macquarie. I helped set up their business in India when the infrastructure boom was coming up. It became one of the largest infrastructure investors at that point in time. A lot of other players followed later. But the story is not really about me when we are having this conversation, but it's more about the fact that Abhijit, you, me, Pranav, Mathew, and some of your colleagues here, and a lot of participants are interested in hearing the story is because we do believe that there is something good in this story. There's something interesting in this story, right?
Certainly.
And what is that interesting part? Which is that the fact is that we being Indians and being in India, we have always been short on infrastructure. It affects our quality of life. It affects us in every possible way. And if there is an opportunity that comes about, which helps you in your own small way to support building that infrastructure, right? Recycle the capital. We are at the end, which actually is not building the infrastructure. We are only facilitating recycling of assets and helping savings to move, kind of financializing the savings to move into infrastructure, right? So that's a very technical role that we are playing in this. So I think somewhere embedded in your question is the reason why we are all here is that I could sense that there is an opportunity for me to be able to contribute. The government was very, very supportive in helping us build an organization, which allowed me to hire professionals like Mathew and a lot of other people who are working with me. It enabled us to get very, very marquee investors. Like Trust came in with a very large support in the first round. They have continued to have engagement with us. Now they're helping us raise the bonds as well. So in a way, that transformation, that movement, etc., was all part of overall arc of something interesting, something different, and I'm glad that we are having, because of this, we are having this conversation, and this message is going to others also.
Sure. Thanks, Mr. Suresh. Similar question, for Mr. Mathew. You have also been from the corporate world, from L&T, and now you have, transitioned to the public sector unit space. So what has been your motivational drive? If you could, share.
I think Suresh has more or less answered it. So in my last, I've been with banks for quite some time, then with L&T, and my last role I was a CFO of L&T's InvIt, which I think it was one of the biggest road projects. So when Suresh joined, he gave me a call and said, we never knew each other. He just called and said, and so like the rest of the team, I don't think anyone of us knew each other before, Suresh getting us together. It's like this movie of the Dirty Dozen, but hopefully we're not dirty. Just calling each of us, pulling us together, getting us as a team, getting things going.
Yeah, I think so. He put in a very good point, and given that we are in the very august company here, is that the team that we put together is all come on their own individual merits. None of us, none, in the investment manager or in the project SPV have worked with each other before. Nobody has come on reference. They have all come on the merit. We put through a professional process, and I dare say because of that, actually we have been able to get better professionals, because people after one selection, second selection, third selection, people get that confidence that if they're getting an opportunity to, come for the interview, etc., they do believe that, we will handle this very, very professionally. And, that's why we have been able to get put together a very good team.
Right, right. I mean, we are definitely lucky to have leaders like you in NHIT, and it motivates a lot of Indians to follow leaders like you in the professional careers.
So, but let me intervene and say that shows the seriousness of the entity to professionalize itself and come out in a very professional manner.
Absolutely.
It's not just like one entity is created to transfer assets or something.
Right. So yeah, to our viewers, we are having a discussion on a very powerful and a fundamental organization in our country that is driving the building of the nation. And that brings me to the next question. So the next question is, most of us are aware of NHAI very well. I mean, since our childhood, we have heard about NHAI, National Highways Authority of India, and that NH, the symbol on the roads, NH17, NH6, so many kilometers away, right? So we have seen it since childhood. And now we are getting to know about National Highways Infrastructure Trust. So I would request Mr. Suresh to share the structure of NHIT and how, what is the, organizational structure and linkage between NHAI and NHIT.
So before we talk about NHIT, I think we have to set the context of where do we fit in the overall cosmic world of infrastructure or NHAI. So like you said, it is such an ubiquitous organization, right? You encounter it leaving any city that you are in.
Yeah.
And I think general perception, and I'm sure, I'm not wrong here, is that the quality of roads, quality of connectivity has become extremely better than perhaps it was 5 years ago or 10 years ago. So NHAI has done a great job in building a network of roads across the country. But as any prudent businessman, you've got an asset base that you've created, right? Which has been mostly funded by public capital, the taxpayers' money. But it has got a role as an authority to continue to upgrade the infrastructure, to build new expressways, logistics parks, as the country progresses forward. So so the thought started 2 years ago when. 3 years ago, when the National Monetization Pipeline was being drafted. And something that perhaps I didn't mention earlier is that I was lucky to be a part of that committee which was drafting the National Monetization Pipeline at that point in time in my past role at Macquarie. And NHAI having the largest share of assets and having also the best sophistication to be able to commercialize assets. So they've had, right from the good old days, annuity projects, BOT projects, TOT, HAM, InvIT. So they have kind of moved on that curve extremely well. They've had lenders, stakeholders, investors come along on that journey. So, so why I'm narrating a longer story here is that in order to continue to fund that growth, it was agreed that NHAI would be monetizing assets. NHAI has the largest share within the National Monetization Pipeline. The total pipeline is 6 lakh crore to be spent or to be monetized over a 4-year period. Now, in a very simple words, one could privatize roads, not privatize, but put it on the TOT and give the concessions out, which they have been doing for the past few years. But at the same time, there is an opportunity, and that's exactly why we are here in this room. Is that the savings, people are having more savings. The interest rates that hitherto we used to get from the banks through FDs, etc., has been suppressed. And generally, there has been a move to move those savings into other avenues. Globally, infrastructure is a very large asset class for having those savings. But in India, we don't have that as an asset class yet. But if you have on one side of the equation the supply of assets, and the other side you have the capital, right? Both domestic and foreign, which is happy to come into this. Then the government thought that there is a requirement for a platform in between, which is what NHIT is, for them to be able to connect the two. And that's where we sit in the, like I said, overall cosmic world of NHAI, that they would continue to build assets. They have a lot of operating assets, which they will monetize through TOT and InvIt. It's not that they're just going to do InvIt only. The assets that go to TOT targets a different target set, because those guys want to own assets, operate, maintain them themselves. Whereas average financial investors, institutional investors who don't want to have an understanding or have the wherewithal to be able to manage the assets themselves, but would like to back a team where they could invest into it and take advantage of the monetization, as well as allocate this part of their capital or savings into kind of linking it to the national GDP. So that's why this proposition came about. We would continue to get more roads from NHAI. It's already there in the prospectus that at least 1,500 kilometers of roads will be given after the initial 400 kilometers, right? So we're talking of roughly 1,900 kilometers. At this point in time, we are only at 650. Right? So that means there is a long journey to go. Now, this is the minimum. Maybe there'll be, logically, it should be much more than that.
Right.
So when we are speaking with you and other people out there, who are interested in looking at infrastructure and the road sector, is that this is the platform which has got backing from very large institutions, very high quality advisors, bankers. Some of them are here with me. Hopefully, we will get support from the bondholders as well. We can go and raise debt from the banks at far cheaper rates than perhaps we will be able to raise from the public. But we are also looking to expand the market in the infrastructure investing. And, once they start coming onto our platform and take some exposure, we do believe that there will be a continuous supply of more and more assets coming in, which will allow them and enable them to allocate more and more part of their capital to this sector.
Perfect.
A long answer to your question, but I just thought that it is important for you to know the genesis, why we are here and where we are likely to go.
Nobody
and
articulated it so well.
Yeah.
Nobody.
And I think, all of us can relate to the story wherein, we as retail investors now have this privilege of being able to invest in NHAIT's this fundraise, which basically is something we in our own small ways are being able to contribute, right? And at the same time, we are earning interest, which is around 8.05%, which is far more than bank FDs. And this is a AAA rated paper. So, nothing better than this. So definitely, I'm sure a lot of our viewers would be very much interested, in participating. There's no doubt about that. So, we would like to know, for the benefit of all, what is the total amount of quantum that NHIT is raising now through this NCD IPO, and what is the purpose for which this will be deployed?
You want to take that?
Yeah. So, okay, let me take the question.
Sure.
So let's take a step back. Okay.
Sure.
In the round one, we had done a valuation of around 8,000 plus crores. The enterprise value is around 8,000, of which the debt portion was 2,000 crores. Okay, and out of the 2,000, we had drawn down 1,480 crores. 520 was meant for initial improvement works. Okay, so now we'll keep that aside. Now, in this round, the valuation is close to 3,800. What we are doing right now is we have got the equity raise already done. We have also got a sanction of 857 crores, like Suresh was mentioning, at 7.25 from Bank of Maharashtra. Now, this 1,500, we would, like Suresh again mentioned, typically we would have normally taken it from banks, but we had chosen to take it from the public market to improve the market per se. Now, knowing that a public issuance takes a little more time, because not till we get the listing and trading approved, we can't use this money. We also have a 1,500 crore bridge loan from SBI.
Right.
SBI in round one was the lead bank, and they were very comfortable with it. Going ahead, they've given us a 1,500 crore bridge loan, which we would draw down immediately. Now, let's assume that we get the listing and trading approval for the units, let's say by day end today or tomorrow. Typically, we could also draw down the 1,500 crores immediately from the bridge loan, pay that money to NHAI, and our clock starts ticking in the sense we can start collection of tolls immediately. Now, so that will help us to garner our revenue immediately.
Right.
And then once we get the NCD money, we will use that to close off the bridge loan.
Right.
So in short, 2,000 first round, 1,500 second round, 857 additional for improvement works. So that's a total quantum of loan. The total security, the security is being shared pari passu among all the lenders.
Got it.
So what happens is we give these loans to the SPV. The total loan is given to the SPV. SPV pays off NHAI or uses it for improvement works. SPV pays principal repayment to the trust, interest repayment to the trust, and dividends to the trust. These are escrowed at the trust level. First payout to the unit for the debt holders, and after the debt holders are paid, then the surplus goes to the unit holders. So the mechanism is also very well covered, and to the satisfaction of all the other market investors who have put in the money, knowing that they are second in line to collect the money.
Right.
But they get it only after the debt is paid off.
Right. So, for first-time retail investors who are here and who would be seeing it in future also in the short time. So, this is like secured senior debentures which are being issued, right? And the first claimants to the money, the money first flows into the secured senior debenture holders, right? So a great amount of safety protection has been built for investors, right? So it's a great mechanism for you to invest in debt. Now, with that, my next question is...
I think something that I just a small interjection here.
Sure.
Is that, in the overall multiple numbers here, our enterprise value, for example, of the first round assets and the second round assets is north of 12,000 crores, right? 8,000 was the listing price, but after that, the NAV has only moved further. But let's assume even if it's 8,000 and this is 3,800, where is the total debt? Under SEBI InvIT regulations, we could have gone up to 49%. So we could have gone up to 6,000 crores. But what we are taking is, less than 4,000 crores. So 2,000 crores upfront plus circa, 2,400 at this point in time. So we are kind of building in a lot of conservatism into how much leverage we take. And it's not what is applicable under the regulation, but what we think if we are going ahead and building relationship with our investors, right, through you, and we need to continue to come back to them for further fundraising, etc. So they need to start feeling comfortable that the leverage is low, enough margin is sitting up in the cash flows for them to get paid, even in the times when there could be some stress coming in the economy, etc. So a lot of those factors have been taken into account in designing this NCD that is being put forth in front of the investors.
Right. And I remember, Mr. Suresh, you had mentioned in one of the calls also, looking at the cash flow that gets generated across the tools in the country, it's a huge volume of collection, majority coming through the FASTag mechanism. So, direct getting into the bank account of the entity. And then, with that, the traffic volume increasing, the mobility increasing across the country, obviously the toll values are also going up. So at a bare minimum of 3% safe, which is year on year, there's going to be an increase. So that's definitely a tremendously positive point. So my next question is to Mr. Pranav. So Mr. Pranav represents Trust Capital, which is one of the marquee private investment firms and is assisting in the entire process of fundraise as a lead manager institution. So Mr. Pranav, we would all want to understand, in general, what does a lead manager institution mean, and what are the roles and responsibilities of such an institution?
Excellent question. In fact, this kind of a question has not been asked to me before.
That's right, actually.
Yeah. So we all, assume. So basically, lead manager is a merchant banker who is registered with the SEBI, and the role of the merchant banker starts with the interaction with the entity which is raising funds. Okay, and then we start liaising, and then we guide them onto what kind of instruments, what kind of tenure, what kind of interest rates, etc., and the methodology of raising funds. So suppose an entity like InvIT, NHAI InvIT, is wanting to raise through the IPO route, which basically it is mandated by we had heard Mr. Nitin Gadkari, Honorable Minister, and he gave us some insights into his presentation, saying that that he wanted to retail out this issue, so that the objective of entire issue is to be more on the retail side. As Sir had already pointed out that they are getting cheaper funds, but they want to increase their base and make it a mass base, so that everybody is able to participate and take advantage of such a nice structure. So then from the time of interaction with the issuer to the point of getting them to the market, there are various stages and various agencies whom we have to interact, be it the ROC, be it SEBI, with the legal firms, etc., the audit firms, etc. We have to compile everything, and we have to at the same time advise the issuer on how to go about things, and besides a structure. And at the same time, we have to speak with our marketing teams like yours, and get a feedback as to what kind of appetite is there in the market, what kind of quantum can be absorbed at a particular rate, and we arrive at a rate which is acceptable to both the sides. So ultimately, so pricing is done, and finally all the documents are filed with ROC, and we get a approval, and then we start. Ultimately, we launch. Our work doesn't end with just launch. We market before the launch. During the launch, we try garner as much as possible. I mean, we would definitely look at oversubscription, especially with such marquee issuers. And then it goes into post-production, as you call it, which is, after that, all the data is compiled. It is sent to the RTA agent. Okay. And then the allotments are done. We have to see to it the allotments. SEBI has mandated a time frame of 6 days after the closure of issue. So we have to ensure the forms have reached the collecting banks. In case of ASBA, in case of online, the funds have been remitted, the correct details have been given, the KYC, etc. All this is done simultaneously.
Right.
And then once the fund credits are received, the RTA does the allotment. And after the allotment process, within 2 days, we have to get it listed.
Right.
Because most important thing for an IPO or an investor is to see the liquidity, get the delivery in his demat account, and see that it is traded. Right. That gives a huge confidence. And with such kind of a marquee, sure, for the first 15 days to a month, we are going to see huge volumes, especially coming from retail, HNI, and other small and medium-sized corporates, etc. People who have missed out will also come and buy in the secondary.
Right, right.
So this process is actually, it's a long process, and it involves a lot of interaction, a lot of deliberations, and a lot of discussions with the different stakeholders. And in the end, that's how we reach the final product and get it listed. And when it's traded, we feel happy about it.
Right. Wonderfully explained, Mr. Pranav. So, I mean, great. I mean, it's a whole bunch of operational activities, right from conceiving what amount to be raised, what is the right percentage to be offered to investors, structuring it, taking it out to the masses. It's a huge, enormous activity. Thanks for the detailed explanation. With that, my next question is, this particular NCD IPO for a retail investor like me, right? There's a bit of a difference from the usual ones, right? There is, like, if I put in 10,000 rupees in this NCD IPO, 3,000 will go to one tenure, 3,000, next 3,000 to another tenure, and the remaining 4,000 into the third tenure. So there's a bit of a structuring. Could you please elaborate on that? What the structuring is for the benefit of our investors?
Face value of the bond is 1,000 rupees. Minimum application is 10 bonds, which is 10,000 rupees, and then multiples of 1,000.
Right.
So now each bond of 1,000 is divided into 3 different strips. The first strip is of 8 years, is of 13 years, and the redemption will start from 8th year onwards. The second strip, which is of again is of 300 rupees. Again, the redemption starts from 13th year, and it is for 18 years. The third strip is for 25 years, and the redemption starts from 18th year. 50 rupees each. So if you see, Abhijit, people are used to plain vanilla 3-year and 5-year bonds.
Yeah, that is what we have seen.
We
Right.
we are living in a scenario where India is growing so fast, and with this growth over a period of time, you can't see high interest rates. The interest rates will ultimately come down. What happens when the investor invests for 3 years and 5 years, and then what about his reinvestment?
Yeah.
Institutions can go for the reinvestment things because of this expertise, but the retail person does not have the expertise. They may have guides like you and me, but they don't have the expertise to go about, every time that your amount is maturing, please reinvest.
Absolutely. Absolutely.
So here the person is locked out for 25 years, he's sorted. Second, the money starts from 8th year. So his locking is for 7 years. From 8th year, he's seeing 5% of his investment come back.
Right.
With your 13th and 18th year, he is getting 10%. So it's like an annuity from an infrastructure InvIT, a AAA rated. What more can you ask? I mean, it is an icing on a cake. And especially when you compare your NBFC or bank deposits, the most competitive deposits, even for a slightly lower rated, won't be giving this kind of returns.
Yeah. So, for our viewers, once again, thanks, Mr. Pranav, for, the detailed, explanation on the structure. Just, reiterating what Mr. Pranav has just mentioned. So let's say I, as a retail investor, I don't need to bother about, this 300 rupees, 400 rupees. I go ahead and invest, let's say, a lakh, right, of my savings, and I want to get high interest rate and I want to enjoy it for the next 25 years. By the end of 25 years, we can rest assured that in India, the interest rates would be sub 1% level. We would have become a developed nation like America, and the rates would be at sub 1 level. At that point of time, being able to enjoy 8% is definitely a very lucrative position. Secondly, once I invest, my money gets divided into 3 specific tranches. Each of them are freely tradable on the exchange. So at any point of time, if you as an investor want to sell it off because you have a family need or something, you can always go onto the exchange. And please note that these NCDs are AAA rated, right? So there's going to be a huge demand for it. And it's from NHIT, right? This is one of the marquee public sector organizations. So understandably, there's going to be a huge amount of liquidity, right? And like Mr. Suresh and Mr. Pranav mentioned, right, post listing on the exchange, there could be a huge amount of demand because number of applicants is going to, be multifold that of the 1,500 crores that's being raised now. So, there's always going to be a very liquid secondary market, right? So with that, I think we will move on to the last question for today. To each of you over here, we would want to know, like, India is a very young nation, right? I mean, more than 50% of our population are young, right? They have just graduated of college, are earning. So for these young investors, now they have got multiple choices, and they have also they are getting exposure to these assets like NCDs. What would be your message overall to the young investors of today? So, starting with Mr. Pranav.
I have a very, very different way of looking at this. In fact, I was going to cover this point and somehow I missed it, but it's good that you brought it up. When I was growing up, I had attended a few seminars of some luminaries, financial luminaries, and they had explained the concept of reinvestment. Now, today at 18 or 20, if you are at certain stage of life, okay, if I would be at that stage, what I would do is I would invest in such marquee issues for the next 5 years or next 7 years. And 8th year onward, I would be getting the returns. And for the next 33 years, when it would be my mature age to take my independent decisions, and I would also be left with some surplus, because after 40, 35, 40 is when your actual savings begin. And when you are done with your buying a house or etc. kind of a setting, family, etc. kind of a thing. So such things are really, really, that's why the longevity is actually a plus point for us.
Right.
And this is definitely something wherein savings is a culture that India is familiar with. And by cultivating such and putting in such issues, you are cultivating that, and that is going to ultimately benefit you. That's how we are different from the rest of the world. So my message, yes, enjoy, but save too.
Certainly. That's a very wise opinion. Over to you, Mr. Suresh, for your advice.
Not much to add to what just Pranav said. I think, and I'm going to build upon what he just said, is that the quote that came to my mind, it's attributed to Einstein, but I'm not sure if Einstein ever said it, but it's a great quote, so let's attribute to him.
Certainly.
That, compounding is the eighth wonder of the world, right? And if you are a young person, and compounding is something that is one extremely important concept to understand, in which then the wealth accumulation happens over a period of time. That's point number one. And point number two I would make here is that kind of looking back at my own growing up, and when you look back, is that we tend to underestimate the long-term potential of compounding or savings in the noise of this quarterly, short-term, medium-term, etc. World over, larger part of savings actually go into bonds. If bonds were not attractive investment option for the world for time immemorial, right? Since the time Rothschild bought bonds of the British central bank at that point in time, the fact the bonds have always been there and have created more wealth for the savers, right? So it's just that as we mature in our saving habits, as we hit a critical threshold of wealth individually and as a country, there will be more and more allocation that will come to the bonds. So if you take the 2 points, compounding, which is generally offered by bonds, and the bonds itself as an asset class, I think as a young person, there is an opportunity for you to be ahead of the curve.
Certainly. Great point, Mr. Suresh. And just to add some data further to this, to the bond market, overall the worldwide bond market is over $100 trillion. The equities market stands at $65 trillion. In our country, the bond market is slightly lesser in size. It's close to around $1.6 trillion. Equity market, 2.3 trillion. So you have a massive upward growth in our country ahead, right? And we're in the right time for this. Over to you, Mr. George, for your piece of suggestion.
So I don't have much to say, except just would urge the young viewers to just contemplate on one of the things which you said. Just look at it this way, maybe 20, 25 years down the line, what is going to be the interest rate? And what you're going to get at 8%. So that's only my message to it, nothing else.
Yeah.
Vijay, if I may, I had heard this quote in one of the seminars that I had attended.
Right.
He framed it very well. And in those times, bonds were not, they were a means to raise money, but they were not as popular as they are today. So somebody just said that bonds are FDs you can sell. Simple.
Yeah. Right. So with that, we come to the end of our discussion. We have a few questions. We'll just take a couple of the most salient questions, and we'll request our panelists to give clarification. One common question which has been asked is, what is going to be the taxation on these bonds? A lot of people have this confusion. Is this going to be treated under 54EC? Will I get capital gains, tax exemption, or is it going to be the usual one? So, if this can be clarified.
The vanilla bond. This is going to be a vanilla bond, not a tax exempt bond.
Right. So for our viewers, this is a plain vanilla bond. The interest income will be taxed as per your tax slab. And if you sell it off at a capital appreciation, there'll be LTCG and STCG based upon the duration. If you're selling before 12 months, it's going to be STCG. If you're going to sell beyond 12 months, it's going to be LTCG. Right? The next question that is there is, what is in it? I think we have covered multiple times. Probably I'll take up the question. What is in it for retail investors? I think the fundamental thing is being able to participate in a very safe paper, highly rated paper, AAA rating, right? And giving a coverage of 8% annualized returns for the next 25 years, right? So with low investment of 10,000, I can participate in this. I can put in my funds. I can enjoy the 8%. It pays out regularly, year on year. It's a half yearly paying instrument. So twice in a year, you will be getting the payments. Any point of time, if you want to exit, you can always sell off that specific tranche onto the exchange. That route is always there, available for you, right? There's one question which says that as a senior citizen, can I consider this? Because I will be deploying my funds from retirement. So I will address it first, and I'll request the panel to add a few words. So certainly, I mean, this is a AAA rated bonds, and senior citizens should definitely look at very safe assets. Safety is something which seems to be pretty much built into the structure. This is once again a marquee public sector institution, right? One of the largest institutions in the country, right? The money flows to the bondholders first. This is senior secured bonds, so can be considered as a very good investment option. To our panel, if you would want to add anything on this.
I think it's covered well. Vijit, we have just time for taking one more question.
One more question, yeah.
Please. You take your discretion because he's getting a lot of questions from his viewers.
There are a huge number of questions. So there has been a question on explaining the structure again, but I think to our viewers, we will send over the structure to you in details, explaining once again, so that you can understand. And if there's further clarification needed, you can always get back to us. All right. So I think with that, we come to the closure of this fantastic, very insightful discussion on NHIT's, bond issuance, which is opening up once again on October 17th, Monday. For our investors, you can always visit GoldenPi. The bonds will be live over there. We are privileged to host this bond issuance, and you can invest from there. And a round of applause and thank you for our elite panelists over here for sharing the deep insights into the bond market in general, on investments, and on NHIT and the details. Thank you very much for your time.
One last thing I want to add is, these bonds are on first come, first serve basis. Here we are seeing huge demand coming in from 25% is reserved for each segment, which is QIB, corporate, HNI, and retail. We are seeing huge demand coming in from different segments. So as soon as, I mean, there may be a time when on the end of the first day, it's oversubscribed a lot or something. On the second day, we may take a call to have an early closure.
Right.
So I would request all the investors to bank in or rather bid at the earliest. And since it's a marquee issue, I leave it up to you to have a marquee performance and log in as many applications as you can on the day one.
Certainly. To all our viewers, definitely, this is going
we don't want them to miss out because of
it's going to be a blockbuster opening, and like limited seats, first come first serve basis. So you got to rush in and apply for the bonds, and if you're lucky, definitely you are going to get allotment over there. So we will try and take up the orders on our platform from tomorrow itself for interested investors. Monday it opens, and you can consider definitely by Monday there'll be oversubscription. So you got to hurry, right? To all our investors, best of luck to everybody, and thank you to our panelists. Thank you so much.
Thank you, Abhijit. It was a very insightful conversation.
Thank you.
Good luck to you.
Thanks so much.
Thank you. And thank you all for making time to hear us. Thank you.
Thanks to all our viewers for taking out the time. Yeah.